Welcome to the latest Motley Fool scoreboard. I'm on Unchockable, and we've got longtime fools Dan Kaplinger and Jim Gillies giving a 1 to 10 rating to maybe the company that Jim Gillies talks about the most. It's MedPace, ticker symbol MEDP. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Jim, both of you have 8s.
Yeah, I mean, it's an important industry. They are a contract research organization, so they basically do the guts of drug testing or compound testing, device testing for the companies that discover these things, such as pharmaceutical companies, small biotech firms, medical device companies in some cases. But importantly, they represent a cost savings for these businesses whose job is to do discovery, not necessarily do the boring grunt work of making sure that this thing doesn't have the efficacy of water or isn't going to cause spontaneous tail growth or something like that. So MedPace makes life easier for these clients, which is traditionally a winning business model. Anytime you can find a company that makes life easier for you, it's better. Their niche focus is on a lot of smaller biotechs. So that can be both a strength and a weakness. So they have the reputation of getting things done for small entities. But, when sector financing for the small biotechs slows or dries up, which is happening now, it can impact MedPace more than other players in the space. But overall, I rank these guys, as you say, an 8.
Same idea here. Contract research, it's a fast-growing area. Innovative biopharmaceutical companies are really looking to tap as many resources as they can. Some of those are outside of the company. They want to accelerate their growth when times are good. They want to kind of batten down the hatches when things are challenged. MedPace, very strong reputation in that industry. That makes sure that it can retain its existing clients and also bring in new companies when conditions permit.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jim, you've made Dan drink the Kool-Aid. Both of you have 9s.
Delicious, delicious Kool-Aid. Yes. So I hold that MedPace is a traditional Motley Fool founder style foolish management. You should love this guy if you love the story. His CEO is Dr. August Trundle, founded the business in 1992. He is the only CEO this business has ever had. When they brought it public in 2016, he was buying his own shares in the IPO. Silly me, I thought most founders used IPOs to exit their shares, to monetize a position. Not Trundle. He has consistently made shareholder friendly and reinforcing capital allocation decisions, thinking like an owner because he is one. By the way, he's also the largest individual shareholder of this business. His prior expertise and experience at the FDA, which gave him knowledge for how the whole contract research process worked. But so I'm really on team August Trundle. Don't dismiss the two understudies though. CFO Kevin Brady and former CFO Jesse Geiger. They've both been with MedPace long term. Geiger, as I mentioned previously, CFO. He's probably the CEO understudy, and he's almost 2 decades younger. So when and if Trundle migrates to executive chairman status, I expect Geiger will take over as CEO, which would be a great transition. And last point, Trundle's a billionaire just by building this himself. He doesn't need to work. He still does at age 68. That's impressive.
Couldn't agree more. Love to see an executive founder who spent more than 30 years at the company and still going strong. Only thing I'll add is that not only has Trundle been leading at MedPace, but also has done a good job of being on boards of other companies as well. And I think that kind of keeps his eyes open to what's going on in the industry, what his customers are facing. Kind of that openness. I'd like to see that openness as well.
For financials, a 10 is a fortress, a 1 is yikes. Dan's at an 8. Jim, you're at a perfect 10.
I'm drinking that Kool-Aid, continuing here. No debt, idiotic amount of cash generation, just really, really efficient there. And importantly, as a corollary to that, very shareholder-friendly capital allocation. As I mentioned, no debt. The only way they really return money to shareholders is via buybacks, but they have a very clearly defined valuation point, which they will not go above. And so they'll go multiple quarters without buybacks, and then you'll see the valuation dip, and then you can get a good idea for when they start buying back. Recently, they've been buying back aggressively. Excellent profitability, great margins. The only flaw that had me thinking 9, maybe 10 is their new bookings, which leads to what's called a book-to-bill ratio, which is a precursor for future growth. Anything above 1, portends future growth. Below 1, near-term shrink. The book-to-bill was 0.9 in the most recent quarter. They've been struggling with new bookings, as those small biotechs I alluded to earlier are having maybe some struggling with some financing. But that's not them. They're not providing the financing to these small companies. So I'm going to give a 10. Yeah, I'll say to 10. Near-term growth is going to slow. I think that's fine. Call me in 10 years, and we'll see how it worked out.
On it, I'm not sure I'm ever going to give anybody a 10, and long-term viewers of this know I tend to underscore this sort of thing, but at the same time, I can't argue with anything that Jim has said. Really strong company financially, and yeah, sure, maybe not a perfect bastion of, no book to bill, way over 1 or anything like that, but 8's a solid score from me, and I think MedPace definitely deserves it, at least that.
Dan, let's talk valuation. How well will MedPace's stock do over the next 5 years? And how safe is it? 10's a sure thing. 1's a lottery ticket.
So I gave it 5 to 10%. I gave it a safety score of 7. 5 to 10% is sort of my standard give for this question on Scoreboard, and it reflects my general macro outlook for the stock market generally. I think we'll probably be at the upper end of that 5 to 10%, especially after a pretty big pullback in the stock price over the past year or so. Yeah, as Jim alluded to up front, there's some tough macroeconomic conditions that are kind of hitting the industry a little bit, and that could slow the pace of growth, at least for the initial period of that 5-year period. A little early to say how long that's going to last, whether we have a slightly longer period of economic slowdown or not. But yeah, I think that in general, the safety score of 7 reflects the fact we've already seen a pretty hefty stock price drop that should cushion the blow and provide some margin of safety.
Yeah, I'm slightly higher. I'm up to the 10 to 15% from here. I could easily be pushed over 15, given the buybacks, the aggressiveness of it. They have reduced their shares outstanding by 7.5% over the last 2 quarters. They're down 20% since the peak share count in 2018. So and as Dan says, I think they're at a 17-month low, not even just a 52-week low. So that gets my attention. Full disclosure, I bought more about a week or so ago. Safety score 8. I think Dan has it right. It's macro, which they can't control, but they can navigate it. And historically, they've seen a lot. Again, founding CEO from 30 plus years. They've navigated a lot of environments. I don't think this one is going to be the one that breaks the back.
It's time for everyone's favorite Top It. Dan, is there a company in MedPace's space you like better?
No, not really. It's not an area I follow very closely. What I've tended to see is that larger companies, they may have a bigger scope of work, but a lot of that scope of work is low growth or no growth type area. Might add some stability, but I'm not sure stability is what I'd be looking for here. And so MedPace, I think, has the better balance of growth with plenty of security and ballast inside of the business.
Yeah, and I've looked at a bunch of their competition, and nope, MedPace is the best in the space. Full stop.
Thanks to both Jim Gillies and to Dan Kaplinger. They've given MedPace an overall score of 8.0 out of 10, which means I'm buying at least $1,000 worth and holding it for at least 5 years. Look out for a new Scoreboard every market day at 7 p.m. Eastern. Next up is Academy Sports and Outdoors. Till then, Fool on.
What my crowning achievement was, I once recommended, and this is true, I once recommended a company that did anesthesiology for colonoscopies, because who doesn't want to invest in that, right?